Rob, listen to these statistics. A 55% drop in metal smelting and rolling, 45% decline in minerals, 22.2% decrease in coal. Basically, they are reducing their energy usage. Las Vegas Sands is heavily weighted toward the mass and premium mass markets. Now, in those markets, the operating margins and the EBITDA margins can be as much as 10 times higher than they are in the VIP market. Line has been drawn.
The line has been drawn. Moving to thing number 5 to wrap it up. Fun episode, kind of all over the place, but it's been great. We're going, I guess, kind of a good segue after TikTok. Talking China, going back to deflation. Too much manufacturing, too much malinvestment. You're saying thing number 5, Gary, China's worsening deflation. Here we go.
Yeah, Rob, that's surely been the issue. We've been talking for a while about China's economic issues and manufacturing issues. Last year, Chinese industrial profits fell 3.3%. And, you think, okay, big deal, earnings down 3%. But the problem is, China, their economic miracle was growing 7-8% a year for decades. Now, granted, it was coming from gigantic levels of poverty, and they've destroyed their environment in many ways doing it. But they had a 2.3% decline in industrial profits in 23, 3.3% last year. At some point, that really adds up. So it's the third consecutive year of profit declines. They're starting to experience deflation as a result of lack of demand. And just to give you a sense, and we're going to credit Josh Reeves, intern from the University of Tennessee, for his research on this. Rob, listen to these statistics. A 55% drop in metal smelting and rolling, 45% decline in minerals, 22.2% decrease in coal. Basically, they are reducing their energy usage, they're reducing their industrial production, their metals production. These are the kinds of things that you see in an economy that's really struggling.
Gary, knowing that DKI has a position in Las Vegas Sands, obviously interested in your take there. If you've had any recent thoughts or adjustments in terms of position or what you're thinking.
So, Rob, this is something we've been watching really closely. Certainly, Las Vegas Sands stock has not performed well over the last few months because people understandably have concerns about the Chinese economy. And Las Vegas Sands has the majority market share, the largest market share in Macau, which is the world's largest gaming market. Now, Sands Singapore asset, the Marina Bay Sands, which owns slightly more than half the market share in Singapore, has been performing incredibly well above all-time highs, well above the pre-COVID 2019 numbers. The concern is that things won't go well in Macau. The thing that I would point out to you is we're not seeing evidence of that. So, as Josh correctly pointed out, China's had 3 consecutive years of declines in, industrial earnings and economic earnings, and these trends have been in place for years. But what we're seeing in Macau is continued growth. Now, some people will say, well, wait a minute, didn't one of the big investment banks just take down their growth numbers this year? And we're seeing GGR, that stands for gross gaming revenue, down. And my response, and this is something that I've discussed with DKI subscribers, is yeah, the aggregate numbers are down and I don't care. And here's the reason I don't care. GGR, or gross gaming revenue, is heavily influenced by a small number of VIP, premium gamblers. And those VIPs come and they gamble millions and millions and millions of dollars at the tables and they haven't come back. Well, guess what? That part of the market is not particularly profitable, and it's not the area where Las Vegas Sands specializes. The lack of VIP gaming is a problem for high-end places like Wynn. Las Vegas Sands is heavily weighted toward the mass and premium mass markets. Now, in those markets, the operating margins and the EBITDA margins can be as much as 10 times higher than they are in the VIP market. And in those areas, we're seeing increased visitation and increased spend per visit. And that's why even though the overall Macau Gaming revenue is down. Las Vegas Sands is continuing to grow. Now, once again, people might look and say, wait a minute, the Macau numbers were down last quarter. Yes, because they are completing renovations at two gigantic properties. That will be done in the next 2 months. And once that happens, Las Vegas Sands will not only have all of their assets fully operational and running, but two of their properties will have been renovated, adding more high margin suites and better rooms, and the room rates are going up rapidly, and the occupancy is in like the 98% level. So Sands stock is down on big macro concerns, but when we look at the actual performance of the Sands hotels and casinos and resorts that are open, it's improving rapidly, and within the next 2 months, they're going to have all of their capacity back online. I still love the stock, particularly at these levels.
Great stuff, Gary. And that concludes this week's version of the 5 things. Be sure to head to deepknowledgeinvesting.com. Sign up for a free subscription. You'll get added to our mailing list. Please consider a premium subscription, $100 a month. I'll let Gary do the talking when it comes to return on that. But Gary does a great job going deep into investment positions, understanding the environment, at minimum, giving you the information you need to be informed about a lot of these markets and what's happening. So please either subscribe. I'll get off my sales pitch soapbox